Yes, so this will be the first lecture in the crypto trading course that I've been preparing for you all. And the first topic that we're going to learn is known as the anatomy of the candlestick. We're basically going to teach you on how to read these candlesticks, which is fundamentally the most basic thing in crypto trading since you need to be able to analyze the charts, right? So basically, the first form of candle we have is a bearish candle. Bearish usually means the price going downwards, hence red. And the second is the bullish candle, which is usually indicated by the price going up, hence a bullish candle. Okay, so the bearish candle consists of a body and a wick. Both candles consist of a body and a wick. And the bearish candle always opens at the top because the price is going down, right? The price opens at the top and closes at the bottom. And this is the body of the candle. While the wicks, these are the high and the low of the particular candle that is in question. If we apply this to the charts and I open up the daily chart, as you can see that this is the major daily candle, and if I enlarge it a bit, it started from here and it pumped all the way up till here. This is the wick of the candle and this is the lower wick of the candle. It basically shows the range of movement and this is the body of the candle. Similarly, there's a bearish candle. It started from here and the price went down, hence a bearish candle. And this is the wick. As you can see, it wicked up till 28,461 to capture all that liquidity, and hence it wicked downwards as well, retesting the support once as well. So these are the wicks of the candle, and this is basically how you read a chart. The bearish and bullish wicks come together, and this is how you basically analyze chart. As you can see, as there is more green candles, which are represented by blue color here, the price goes up, then down, up, down, and this is how the price goes. This is how you basically analyze a chart. This is the most fundamental thing that you need to realize in order to analyze a chart. The second most important thing that you need in order to read the chart is basically these time frames. These little time frames that are given here are really important. The time frames that I look for are the daily, 4 hourly time frame, hourly, 15 minutes, and 5 minutes. You do not need to be concerning yourself with the 1 and 3 and even the 5 minute time frame on general occasions, because these are not relatively very safe for newer traders and these are very hard to predict unless you have some kind of algorithms that trade with them. So first of all, we need to reset the chart for the 1 day time frame. As you can see, if we analyze Bitcoin, the 1 day time frame has been in a bullish. It is definitely bullish because it went from all the way from 15,400 till 20 30k almost, yeah, 30,700. So it's definitely bullish. It cannot be bearish under any circumstance. So high time frame bullish. Now we move on to 4 hourly time frame. As you can see, the 4 hourly time frame is moving downwards, so it is currently bearish. And similarly, trend lines will study in another topic, but trend line, it broke the trend line and now it is currently retesting the red trend line. If it was above the trend line, we could have longed this into the upper resistances right around here, but since it's bearish, so it's now retesting it and probably coming down now. This could be a good shot if it breaks this level right here, 27,400. If that breaks, that could be a good shot. So that's the 4 hourly, and this is the hourly. Hourly is in this market condition one of the best time frames that you can use for trading. These are all hourly candles. Bearish and hourly has also been bullish, and you should not be taking any short positions unless this level breaks. This support and resistance I'll teach you in the next topic, but as you can see, this level is really important right now. If this level breaks, you could, if this somehow breaks and retests, you could TP here and definitely TP around here as well, depending upon what type of trade you take. And yeah, so basically hourly is bullish as well. You can draw multiple trend line in order to associate it with the bullish momentum that it is going through. And 15 minutes I generally use for scalping. 15 minutes used to be very accurate. It is now as not as much as accurate due to the volatile conditions of the market. Hence I recommend going with the hourly, which is much better. Hourly time frame is much better. So, and if you observe the 3 minute and 1 minute time frames, the 3 minute time frame is mostly just used for algorithmic trading. For example, if you use my bot, you could have just short sold here and stop loss would be up here. It almost reached the stop loss, didn't hit it. As you can see, it did not hit the stop loss, and it went down, it would have been a good shot. That is how the bot works. But those are algorithmic tradings and not really technical analysis based tradings. So not really worth taking those and at an early stage, especially if you're just starting out as a trader. So the main time zones that you should be focused about the time frames should be the 4 hourly. You should know how to read the 4 hourly time frame. If you enlarge this, you can see it. Yeah, it just wicked out and touched this, and yeah, basically it was trying to regain this box, but it lost it again. Basically, 4 hourly is bearish, and hourly is definitely bullish. The hourly and 15 minutes are the most governing time frames. 15 minutes is a bit more governing than the hourly. It is a lot more quicker to read, and a lot of good risk to reward ratio trades can be taken upon the 15 minutes time frame. And especially one of the most fundamental principles in trading is correlating these time frames. So for example, if I have a support on 4 hourly and I have another support that is on the hourly chart, this purpose support is on the hourly chart and this is on the 4 hourly, hence it's border, right? I can take into account the breaking and pulling of these supports, as this goes till here, it got rejected from here but got support from hourly. So hence correlating these time frames is also very important in order to trade with these. And the 4 hourly is basically used for swing trades, just to know that your idea is working. You would have longed here, since this line got tested and didn't break again, you would have longed here, stop loss below this, and it would have gone to very high. And yeah, that is basically the concept of how to read a chart. This is pretty basic stuff, and after this was just an intro on how it's going to be done. And after this, the intense topics will come, and as further we progress, the topics will get harder and you'll need to revise them on charts as well. You do not need to revise these on charts, you just need to observe charts for these. So basically how I want to take this forward is that I'll progressively make each class harder and harder, and for all the people that are in my Discord, we'll have a specific time for them where they can improve on their charts, and they can publish their charts in a relevant channel, and I'll check those charts as well for them and identify their key mistakes. Because the main purpose of this course, it is free for everyone to watch, and the main purpose for this course is to make independent traders and teach you all on how to read the charts. Because effectively it is only possible if you practice hard and if you learn these concepts well. That is only how you will be able to do this. But yeah, that is how you analyze the different time frames, and how you correlate the time frames with each other, and how you focus on the chart patterns and the candlesticks. And that is basically how you read the chart.